Fed Chair Janet Yellen moves the Fed closer to a December rate hike, and gold extends losses and now is hovering around a 5.5-year low this Wednesday. Joining us now to talk precious metals is iiTrader's Bill Baruch. Bill, thanks so much for joining us from Chicago.
Thanks for having me on again.
So, Bill, let's start by taking a closer look at Yellen's speech today. Are you surprised that the central bank is leaning towards tightening, especially ahead of the holidays here?
No, I'm not surprised at all. Listen, we have low unemployment. We have GDP, well above 2% this quarter, well 3.9 previous quarter. I mean, you look at those right there. I mean, we have reasons to start to move these rates up. Now, yeah, the timing is a little bad, but they've waited this out. They had an opportunity in June, they didn't, and then now it's come time. We had a great payroll report last month, and I expect a good one this month. When you look at all of this as a whole, we are just lifting this off just a quarter of a point, assuming that they do only a quarter point. They wouldn't do more, but just this gets them off the ground. It's necessary to do. I mean, right now, there isn't any inflation, and that's what's holding it back. But at the same time, there isn't a lot of there's no wage growth, no significant wage growth, right. And it's okay not to have the wage growth as long as there's no inflation. But the thing is, with all the central banks around the world, they have been trying to spark inflation, and inflation is going to come out of nowhere before people know it. And they need to be able to fight that in the sense of having higher wage growth. And be able to do that, they need to have more certain policy. So what they're doing by lifting off in December is making policy more certain, and I think that's going to build the stepping stone for a better economy going forward.
Well, let's look at the precious metals landscape here. We have silver below $14 an ounce now. Gold fell again today, and it still has to go up against the ECB's press conference coming up and Friday's non-farm payrolls report. How do you see the metal set up here ahead of this heavy data week?
You mentioned the ECB, and that I think is very important too. With the Fed liftoff, just to backtrack there for a second, you have China implementing more stimulus. You have the ECB talking about implementing more stimulus. So they're taking some of the brunt off the shoulders of the Fed in the U.S. in order to make it an easier path. But back to discuss this week, I think tomorrow's ECB is going to be pretty big. They've really painted themselves in a corner, pricing in that they're going to introduce some new measures. Now, they really should at this point. Inflation data out of Europe this morning missed expectations, and I think as well that signals that they're going to do something. Now, the non-farm payroll report on Friday is going to be big. 200,000 is that expectation level, and that's right that line in this sand that we look at to show growth. Or if it fails 200,000, that would be a failure. But I don't think that's going to happen. I think we'll have another good number.
All right, Bill. Well, we have a few bank forecasts that came out this week. SocGen, Citi, among others, now calling for gold to fall below 1,000 in 2016. Could this be the new reality?
I love to see this because sentiment is getting so bearish. And, our downside target for the last couple of years has been 1033 to 1045. And we haven't changed that. We are getting very close, 1049 today. And I love to see sentiment start to get so one-sided. There are several key technical indicators, about 5 of them, technical and then a couple fundamental that we're looking at. Now, some of this is proprietary, I can't get into here, but one thing I really want to look at is back in 2011 when gold put in a high of about $1,900. Excuse me. Now, that high up there, everybody was so bullish. Fed had started doing the QE2, and then possibly talks of QE3 were already out there. Every central bank around the world was going to have to do this, everybody thought. Now, everybody was so absolutely bullish. Gold was going through the sky. Now, the reality was, if everybody's so bullish, who is left to buy? And I'm taking that into here as well a little bit. Now, we're below 1,100. The market's moved lower. Sentiment is just so bearish. You're seeing these targets move lower. And I think this is very interesting because everybody thinks that the Fed is going to lift off and gold is going to continue to plummet. Well, I don't think that's going to be the case for a bunch of reasons. But now everybody's so bearish. And now who is left to sell? Now, that's what I'm going to look at there.
Good thoughts, Bill. Finally, just some thoughts from you on the U.S. dollar. Do you think we'll see a correction anytime soon here?
Right now, we're back at the March highs, 100.70. Excuse me. And now that level up there, I think is very critical. I've been looking at the 102 level for a long time, and I think the market can get there. Now, what's going to put it there? It's not going to be the U.S. It's going to be Europe. You look at the dollar index. The dollar index is about 60 to 70% or so euro. Now, the ECB, if they implement further stimulus, I think a lot of that is already priced in here, but it's their path over the next year that will push the dollar higher. I'm looking at the Fed to lift off, and then I think the dollar will go higher because of that. But again, a lot of this is already going to be priced in, and a lot of the bulls are already in the market looking at the dollar. And something I'm looking at for myself, I look at it as the meat in the middle. I've been bullish the dollar for the last 2 years, and I'm looking at it as the meat in the middle in this market that I've already caught. I think there's still some upside, and I may look to play that, but I don't want to be caught if this thing starts to top out. Yeah, my opinion may change, just depending how things play out. But I do think the 102 level, that's the 618 retracement on the 10 to 15-year downtrend chart, is going to be a tough level for this dollar to break out above.
All right, Bill, thanks so much for joining us today.
Thanks a lot for having me.
And thanks for watching this edition of the Kitco Gold Report. We'll see you tomorrow.